Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors for this segment, Admiral Markets. Darren Sinnan is away this week. I'm therefore basically joined by Zach Meir from shareprofits.com, who's taking his place. Morning.
Good afternoon.
Right, let's kick off. If you're watching for the first time, we've got a number of slides. We've tried to jazz it up this week in the absence of Darren, just a little bit sort of freshening it up. If there's anything that you think we're missing, please get in touch with us and see if we can adhere to that. Let's go to our first slide of the day. Data released over the European session. Today we've got the Eurozone PMI data for September, came in at 53 versus consensus 54. We have the Eurozone retail sales in August month on month flat versus forecast, again a flat. The prior read was 0.4%. So in terms of QE and the Eurozone, you've got to imagine the ECB are going to move this year.
Well, I think Mr. Draghi said he would. He doesn't actually need to, because he's so strong. He doesn't actually need to get money out of his pocket or out of the ECB's pocket to get things moving. But I think he will actually have to
open the till.
Open the till, exactly. So the data, I mean, not as bad as China, but obviously just flat, just a very flat feeling that they've got there for data, and you know, the market's ready for further QE.
Understood. Now, in terms of this week, we've got China remains closed. That reopens on Thursday. We've got German factory orders for August month on Tuesday. Bank of Japan press conference Wednesday. Bank of England interest rate decision Thursday. I can't imagine that's going to be a big meeting. Clean-up scandal from the weekend. Merkel pressurises Volkswagen. And finally, England World Cup exit may wipe $3 billion off the stock market with ITV a loser. Read the newspaper headlines. Any points there you'd like to pick up on?
Just the clean-up scandal. I suppose you might expect Chancellor Merkel to sort of try and back VW if she could in some ways, sort of fly the flag, the German flag there. It's a small mercy that the Chinese markets closed for a few days. I think that's a relief all around. Probably one of the main explanations why the markets haven't tanked today. So that's good news. BOJ, I think they've got a lot of work to do. Basically, the strategy of 3 arrows needs another couple of arrows, I think, in there. Otherwise, it's just going to fall. It's going to go the way of all the other strategies they've tried over the last 25 years.
Yeah, understood. Okay, so let's move on to our next slides. The thought of the day. Non-farm payrolls disappoint the market. 2015 rate hike bet evaporates. Now, we've seen a commentator this morning suggesting there's still a chance that they may hike rates up in December.
I think it's just, I mean, I think the best way with that is actually it's one of those situations where just assume it's not going to happen until actually it happens. Because from a trading perspective, it's just not helping at all. It's just total distraction. You can see that Yellen, you know, she's just sort of kicking and screaming in terms of not doing it anyway. And, you know, I think that's the way it looks, and you've seen the markets improve on that basis.
And again, that obviously has a knock-on effect. Delay in the Fed lift-off equals delay in the Bank of England decision. Closer the ECB gets to more quantitative easing. In terms of the actual European movers, exchanging takeover this morning, shares rocket on buyout offers from Capita and Apollo Global Management. 2 offers on the table.
Well, it's great. I think the only thing is, I suppose, what took them so long, given that exchanging has sort of been in that limbo for quite a while now. So, you know, obviously they've decided this is the moment.
Understood. So let's go on to M&A rumours and movers. Read this with interest. The drug pricing. New York Times had another piece yesterday highlighting a Valiant strategy, and the knock-on of that should weigh on sector and US market again. Again, you've got this nasty hedge fund person, I use the newspaper terminology, coming in and sort of quadrupling the prices.
Yeah, I think that doesn't help any of the conspiracy theories in that sort of area. But I think the latest was that he was going to back down. But anyway, it wasn't a great gesture, let's say.
Understood. Glencore said to be in talking with potential buyers. I think they were up 71% in Hong Kong on their Hong Kong listing. Reports suggesting there may be some sort of bids for the agricultural business.
Well, I think if it's non-core, then in a way it doesn't really help the situation. So that's just like they've got $30 billion of debt. So unless that agricultural business goes for a very big amount of money, it's not really going to help the main businesses they do.
Understood. Let's move on now to US data points to keep an eye on. Today we've got the services PMI, the prior read was 55, and we've got the ISM non-manufacturing index, and again the forecast is 58. In terms of the week ahead, we've got the Fed's John Williams speech. The Fed guys seem to be talking a lot at the moment.
Well, I think they need to, because obviously the chair doesn't is not big on speaking. So I mean, I would look forward to that. That's probably like one of the key events of the week. In fact, looking forward to that, and obviously then the minutes as well, because listening to Janet Yellen is quite a painful experience, especially if you're trying to work out what she's trying to say on interest rates.
An ISM manufacturing index for September. Now, I put here, and worth noting, the biggest intraday move turnaround in 4 years on Wall Street. Trading averages well above the recent volume averages. That is,
yeah, I think
that's a healthy.
Yeah, I mean, I think that there's always there seems to be the rule with big data anyway, that the initial move is the wrong move. So on Friday, the initial move was down for all the markets, and then they rallied after about, I don't know, sort of 4 o'clock or something like that our time. They just went straight back up again. So a bit of the trading rule did work, of going the opposite to the the news was bad. The news was good for the market in the sense that the jobs number was weak, but the market went the wrong way first, and then it went the right way, and we've got the follow through today.
But experience dictates quite often on a bad or a good number, the markets tend to go the wrong way first. And dare I say it, to take out the stops.
Well, that's what I was saying. Yes. So but it worked a treat on Friday, that rule. So well worth remembering.
Okay, let's move on now to US pre-market movers and levels. Again, I'm going to give a plug to the FT, the weekend FT. Absolutely incredible read. The amount of data and the amount of information in this publication. Shares of Macau casino operators jumped on Friday, and there's rumours of the Chinese government intervention. Probably worth me mentioning sort of what was written. Shares of Macau casino operators jumped as the decline in gaming revenue slowed in September. Reports that the Chinese government is considering measures to support the region. Gross gaming revenues fell by 33% in September, according to the latest figures from Macau's Gaming Inspection and Coordination Bureau. That compared with 35% drop reported in August and was much lower than the 49% jump recorded in February. Local media reports that Chinese government would support Macau's growth in all aspects, also gave casino stocks a shot in the arm. So incredible.
Well, I think it's tough times when the gamblers stop gambling. So I mean, it's great that the Chinese are intervening there, but it obviously is a leading indicator on how bad things are.
Yeah. End of an era. Google, as we know it, will cease to exist. New conglomerate known as Alphabet will take shape.
I think it was just a waste of time.
I wonder how much money that's cost.
Exactly, a waste of time and money.
Okay, let's talk about chart points. We've got some chart levels to watch. I've widened these out a little bit because the next Wall Street show is not till Friday, so I thought we'd give you some levels that are good for the week. FTSE 6150 plays 6297. The DAX 9650 plays 9800. The S&P 1940 plays 1970. And the Dow 16,000, a big psychological round number, plays 16,450. Any points on those? Is that worth mentioning?
Yeah, I mean, I think for the FTSE really, the 6260, 6270 has been the peak, the actual peak, but 6297 is actually the 50-day moving average. And that's been resistance all the way down from the summer. So that really needs to be cleared if this is just not just an intermediate recovery before a new leg to the downside.
So that's a real key chart point.
I think that's a key chart point, yeah.
In terms of the currencies, euro, dollar, we got 112, double O's on the downside, 112.96 on the upside. Aussie 69.05, playing 71.91. Dollar yen 18.68 on the downside, 21.38 on the upside. And we've got lots of commentators suggesting we're looking for a pullback in the dollar yen pair. And finally, cable 51.08 plays 54.09. And again, the technical analysts keep highlighting this 51.00 areas key support on cable. Last thoughts on currencies?
Well, obviously the BOJ will presumably move dollar yen one with the other Wednesday, presumably trying to get it higher rather than lower, because at the moment it really is struggling. And really on cable, you would expect if 151.00 does break, it could snap quite badly.
Okay. Zach Meir from shareprofits.com, thank you very much as always for your time. That wraps up the Wall Street crossover show. Just to repeat, we're back at 1 p.m. this Friday. Have a good week. Thank you.